Hello everyone, how are you? This is Kavita Ravindranath with Accounts is Easy. I hope you're doing well, and yes, you've been in touch and with the channel, and you've covered whatever we have done till the last video. Okay, I know some of you search a few things. For example, like today we'll be doing that interest on capital. Many of you would have searched interest on capital and let's do things straight away with this video, and you haven't seen the other videos. Now what happens is, there are certain things that you follow only in a sequence and some things you can follow standalone. But it's very important to go through the entire channel of in that particular order. So if you have not seen the earlier videos, I would strongly recommend that you see, because those are dealing with very technical and conceptual things, and without conceptual clarity it's very difficult to get a good strong hold on accounts. Okay, not in tidbits, if you just want to pass or just do with things, that's okay. But if you want to really have a good grip on the subject, you will have to be fundamentally strong, right? Okay, so in the last video what we did was charge against profits. So if we have partners, rent, or interest on loan, etc., things like that, we have done the treatment of all of those in profit and loss account. Okay, now we come to what comes after PL account. We have already discussed that in our previous videos again, but just to recap is, you remember, from PL we bring the profits from the profit and loss account to PL appropriation account, and there we have the net profit brought down here, interest on drawings of all partners, interest on capital, interest, then salary and commission of partners, then transfer to reserves, and the final profit is transferred to partners' capital or current account. So if you remember all of this, we need to now go to each and every element here. So now henceforth all the videos will be in that way. Individually we will take up each thing. First thing, interest on capital. Why does the firm allow partners interest on capital? Because all partners are investing in the business. They could have invested outside as well, other than the firm, yes, and they would have earned certain amount of interest or returns or whatever income from their investments. Similarly, if they're investing the amount here, they should also get some returns. You'll say, okay, yeah, you've invested, you're getting profits, right? Yes. But all partners might not have invested equal amounts of capital, but maybe their profit sharing ratio is equal. There comes the disparity. So whoever has invested more, first thing, we give out of the profits interest on capital. So you should understand, children, all of these are appropriations, not a charge against profit. So if we have a net profit, then only we will give them interest on capital, their salary, their commission, and the divisible share of profit in the profit sharing ratio. Alright, if we do not have profits or sufficient profits, then we will have to put a stop and wait and see. Also, these appropriations are by default appropriations. But if you say, if your partnership deed says interest on capital has to be provided even in case of loss, or is to be treated as a charge, then things will go different. Then it doesn't remain an appropriation, it becomes a charge against profit, will go to profit and loss account. Yes, it will go in the determination of net profit, not as an appropriation of profit. Got it? So let's see. Let's take sums and let's calculate interest on capital, which is very, very simple. Now, let's understand what goes into calculation of interest on capital. When we calculated simple interest, when we were doing simple interest chapter in 6, 7, 8, in that time, you know that the amount, the rate, amount here was a principal, the rate and time for which you have invested, all that is important to find out interest, right? So interest on capital is basically the amount of capital invested into the rate as a percentage, of course, 5%, 10%, whatever is given there. There is no default rate of interest on capital, please. It's not 6% per annum. Many of the students do that. 6% per annum is for interest on loan. That is also on the loan that the firm has taken from the partner. The liability, not even the other way around. Here, please, there's no default rate of interest. If your deed is silent about interest on capital or doesn't mention the rate, no interest on capital. So if this is for the whole year, suppose the partner has brought in some capital during the year, we will have to bring into the consideration the time as well. So if you're talking about this capital invested, usually we are talking about the opening capital. Usually interest on capital, if the capital is not changing, is provided on the opening balance of capital account. Then suppose, so this is for the whole year, that means what? 12 months out of 12, it becomes 1, so that's why it's not mentioned. But suppose the partner is bringing in additional capital of say 1 lakh. 1 lakh on 1st of October, that is during the year. So 1st of October to 31st of March, I will see that is the time involved here. Please understand this. This is your entire year. This is 1st April, it is 31st March, this is 1st October. So if I say partner A has invested on 1st April 2 lakhs and on 1st October the same year another 1 lakh. We need to calculate interest. Of course, you can see that the capital is changing during the year. So here 1st April he invests 2 lakhs and the additional 1 lakh comes here. So here your capital becomes 3 lakhs, isn't it? On 1st October, when A brings in this additional 1 lakh, his capital becomes 3 lakhs and it remains 3 lakhs for the next 6 months. So from here to here, it's 6 months and another 6 months here. Okay? So how do we go about interest here? Interest on capital will be allowed on this 2 lakhs for the 6 months because it was 2 lakhs for the 6 months period. I'm taking the interest as 10% and plus next on 3 lakhs because for the remaining 6 months, how much was the capital? 3 lakhs. 3 lakhs into 10% for the remaining 6 months. If we add both of these, you will get the interest on capital to be given to A. Clear about that? Since straight away 20,000, aadha 10,000. 3 lakhs, 30,000, half of that 15,000. So 25,000 is his interest on capital. So what do we learn from here? The interest is supposed to be on the amount invested and for the time it was invested. Okay, the time period for which it was invested and the rate is given. Clear? So we will have this. Of course, there are other ways. Some students do it differently here. For example, the same thing can be found out in another way, and whichever way suits you, it's perfectly okay. The answer you should get. That's it. Now 2 lakhs was invested for the full 12 months. So some will say we will do 2 lakhs into 10% straight away because it's for the whole year and plus 1 lakh, the additional capital, into 10% and that was invested for 6 months. Right? This 1 lakh additional was invested only for 6 months. So on 1 lakh I give 6 months interest. But 2 lakhs was invested for the full year. So I give it 12 months interest. Very much perfectly okay. 20,000. And here 10% of 1 lakh 10,000. Half of that 5,000. See. You get the answer as 25,000. So whichever method to find correct, you can take a screenshot of this. This is for completely for your understanding. I hope you've got the time effect here. So now, this is pretty basic. Let's take a sum. Let's see what the sum is saying. PQR are partners in a firm. From the following information, calculate their effective capital employed and at IOC at the rate 10% per annum. Now, what is the meaning of effective capital employed? Effectively, if I see, taking into account the amount invested and the time period for which it was invested. That gives the weightage of a particular amount invested based on time. That is what is effective capital employed. And then it will be easier for us to find the interest on capital. Now see, capitals are given on 4 different dates and the amounts are also given. Some places it's changing, some places it's the same. Let us take P in the first place, alright? P here. So let's calculate first thing, the effective capital employed. Effectively throughout the year, how much did he employ? Now here it's given 3 lakhs on 1st April, meaning this is the opening balance of capital for P. 3 lakhs, and then we see on 1st of July, 1/7 is July, 3,50,000. That means I can see here an increase of 50,000. The increase is of 50,000 in a certain sum. You might be given this as P brings in 50,000 additional capital on 1st of July. Okay, so whichever way it's worded, you just have to find out how much did it come up to. Now it is with the addition of 50,000, 3,50,000, and it stays like at 3,50,000 for another few months. Then it changes its 1st of Feb. 2 is 1st of Feb next year 23. So 1st Feb it's again becoming 30,000. That means P has withdrawn 20,000 out of capital on 1st of Feb. Here, now let's see effectively how much did he invest. 3 lakhs. It was there constantly 3 lakhs from 1st April till 1st of July, meaning April, May, June, 3 months. For 3 months, so I just multiply with 3, nothing else, no by 12 or nothing. This is it. Then again, it changed to 3,50,000 and it stayed at 3,50,000 for how many months? From 1st of July, so we count July as well. And it is changing on 1st of Feb, so we will not count Feb here because this is 1st of Feb. These small little errors we need to avoid. So we'll count till January, from July to January. July to December, 6 months. And one more month, 7 months. Then it changed to 3,30,000. So we add 3,30,000 into 2 months. Feb and March, 2 months, last 2 months, it remained at 3,30,000. So if you see, just cross check, 3 plus 7 plus 2, it should come to 12. So even if you by mistake, you've done some idhar-udhar, okay, so you will get to know, alright. So please check whatever you are doing, there is always a cross check. Well, not always, but mostly. Okay. Now this will give you your effective capital employed. So please calculate that. That should come to 40 lakhs 10,000. Effectively, this is what you employed. Now when you calculate interest on capital for P, this capital employed into the rate of investment, interest on investment, that is interest on capital, and I'll divide by 12 because see, this is basically I multiplied by 12. Obviously this is not the actual capital employed, this is the effective capital employed. If I take the time into consideration, it's just like calculating the weighted average, right? Weights for 3 months, weight 3, for 7 months it was there 3,50,000, so I multiply by 7, like that. So here this should give you your interest on capital, which is coming in decimals, which is coming to 33,000 416.666. So here we will round it off to the nearest full figure. Okay, 33,417. Clear about that? So this is how we calculate number 1, capital employed, effective capital employed, and 2, IOC. Clear? Now we'll go to Q. Okay, the same way. Now here the only thing that you have to take care of is do not go wrong with the number of months, etc. Those calculation errors you should avoid. Let's take for Q. Capital employed. Started with 2 lakhs 1st April and it remained as 2 lakhs till now. It's here same. It's changing here on 1st of November. 1st of 11 is November. So it stayed same from 1st of April to 1st of November. Count how many months? Okay, 6 and 7 months. Yes, April to 1st October is 6 months, so 7 months. Plus, this is changing to 2,50,000 and it remains like that from November till 31st March. November, December, Jan, Feb, March, 5 months. So if you multiply, you should get this as 26,50,000. This is your effective capital employed. Interest on capital for Q, effective capital employed into rate of interest into 1/12. Again, if you see, this is coming as not a round figure, 3333, a recurring decimal. You will round it off because we want in complete rupees. Okay, so 22,083 rupees comes as interest on capital for Q. R. Let's say R. R has invested 2 lakhs in the beginning of the year and it changed, yes, on 1st of July. So again 3 months, April, May, June, it stayed constant. Then it became 1,50,000. That means he has withdrawn here how much? 50,000 here. This 50,000 has been withdrawn. So now it becomes 1,50,000 and it stays at 1,50,000 for the remaining entire time. So how many months? 9 months. From 1st of July till 31st March. So if this is calculated, this comes to 19,50,000 and interest on capital will be on this effective capital employed. So it comes to 16,250, automatically a round figure. Alright. So this is how we calculate our effective capital employed and interest on capital when the capital is changing during the year. Now here I would like to make a special note here. Partners can make regular drawings. Regular drawings meaning drawings against profits. And partners can withdraw capital. These two are separate things. Okay, I'll quickly go through the conceptual difference between that before you make an error here. It's very, very important to understand that, see, the partners have invested, they're doing business, right? Now profits will be calculated only at the end of the year. Now, are they supposed to, if suppose you are a partner and you are doing this business and this is the only means of livelihood for you, you would obviously withdraw something from the business for your day-to-day expenses, their personal expenses. Or would you wait for the profits to be calculated till the end of the year and then pay your household bills? No, right? So here, partners can withdraw in anticipation of profit, expecting profits at the end of the year. That is called regular drawings. That's pretty normal. Alright? And drawings against capital is whatever you had actually invested, the capital, that you are withdrawing. So that will affect the capital account. Your regular drawings will be going to drawings account because that is not changing your or reducing your actual capital sum invested. Profit is more than that. Right? You've invested certain capital, obviously you want your capital to grow. How will it grow? If you have profits. If you earn profits, your capital grows. It increases. So out of that increase, you are trying to withdraw, not the actual amount invested. So these two types of drawings are different. I'll quickly make a note here and you all please note it down in your notebook. I hope you're doing the sums along with me because simply listening is like, do it yourself. Calculate, use the calculator, get habituated to using the calculator properly. Otherwise, most of them, I see, and not most, but many of them, everything they've done well, correctly, but the calculation part, they get stuck. So get comfortable using the calculator. All right. So before going on to interest on capital, the next sum, this is important. Please take a screenshot of this. Okay, I'll quickly explain this once again. Drawings against capital and drawings against profit. This affects the calculation of interest on capital. As we just saw, partners were taking out capital, so obviously the interest on capital to be given, the amount changes. So this is affecting calculation of interest on capital. This regular drawings, that is drawings against profit, will not affect the interest on capital calculation. Capital is not changing at all in this case. So why should it affect interest on capital calculation? Of course, we will be charging interest on drawings to partners. We have to charge from them the interest on drawings. So this drawings will be required for that calculation. This amount is debited to capital account because capital is reducing, and this is debited to drawings account. Regular drawings account are transferred to capital account only at the end of the year as a transfer entry. Okay, we do not debit it the day they take out from the capital. No, from the business end. Here, and this is of course just for the practical part of it. Okay, this is not a distinction as such, but this will be important for you to understand for solving sums. If drawings is simply given in the sum, it should be taken as drawings against profit. Regular drawings. Partner withdrew 10,000. Means what? Partner has withdrawn against profit 10,000. That's implied. If the sum has to specifically mention that partner withdrew from capital 10,000 or withdrew against capital 10,000, then only I consider this as withdrawal of capital. So again, these two terms, this is called drawings against capital is called withdrawal of capital, and drawings against profit is regular drawings. Very, very important concept. Please make a note of it because this affects your interest on capital and interest on drawings calculation both. Okay? We take one more tiny mini sum. Well, this is the last sum for the day. Okay. Let's read the sum. Partner A had 5 lakhs in his capital account on 1st April 2023. He sold his personal car for 2 lakhs and invested half of the proceeds into the firm on 1st of December 23. He also paid out of the firm's bank account 50,000 on 1st of Jan 2024 for his personal expenses. Partners are allowed IOC at the rate 5% per annum. Calculate A's interest on capital. Okay. Read the sum well. You can pause the video if you want. Read it well. And then let's calculate interest on capital. Okay. Try it on your own given whatever concepts we have discussed till now and whatever calculations I've taught you. Okay. I'm waiting. Assuming you paused me. Okay. Now, again, play. Interest on capital is based on the amount invested, time, and the rate. And here, it's been given that he's getting some additional capital also, and he's making certain drawings as well. Right? Now, you have to understand, children, what drawings are these? Is this drawings against capital or withdrawal of capital? I mean, drawings against profits or withdrawal of capital. What is it? Read it properly. If you read, it says he also paid out of the firm's bank account. He's paying out of the firm's bank account for his personal expense. Definitely this is drawings. But what type of drawings? 50,000 on this for his personal expenses. That is all that is given. He's paying for certain personal expenses 50,000. This is drawings. Is it specified? Withdrawal of capital or against capital? So this drawings is not going to affect your interest on capital calculation at all. No effect. इसीलिए बताया था इससे पहले just you must have paid attention. Now coming to this. Partner had invested 5 lakhs in the capital account. I mean, he had 5 lakhs there in the beginning, opening balance. He sold his personal car for 2 lakhs. Personal car sold. And invested half of the proceeds into the firm. Half only. So what about this 2 lakhs? 2 lakhs nothing as such, but half of that is 1 lakh, and that is what he is bringing as additional capital. So let us calculate his interest on capital. First thing is 5 lakhs from the beginning into, when did it change? On 1st of December. So I'll leave December, I'll not count December. I'll count till November. So April till November is 8 months. Please calculate properly. Don't be shy, okay? I see a lot of people jumping up with the number of months. So it's like, April, May, June, July, August, September, October, November. 8 months. Then, we stop at November. And then it changed, 1 lakh was added, so it became 6 lakhs. So 6 lakhs into the remaining 4 months, December, Jan, Feb, March. 8 plus 4, 12. This is effective capital. Rate of interest is 5% and divide that by 12. How much are you getting? You're getting 26,667. I'm rounding off, it's coming as decimals. So 26,667 is your interest on capital for A. How many of you got it right? So also give me a quick feedback in the comment section that I got it right, teacher, and that will really make me very, very happy. Even if you have gone wrong, say, no problem. Now, this is the learning period, children. This is a very, very beautiful phase of your life. You're the student. And I personally believe as teachers also, we have never stopped being learners. The person who stops being a learner at any point of time in his or her own life is dead. You have so many new things happening around you in your subject, in your study, in your field of work or otherwise. The world is vast. There's so many things happening, so many new things that we have to learn. We have to unlearn what we don't want to continue with. So these things will make you, even a better person. So it's okay. Even if you've gone wrong, you can straight away say, okay ma'am, I did go wrong with this. And if you still are confused, you can ask anything related to the video. Okay. And yes, before we sign off for the day, I also take personal online classes, as I have done with many children earlier as well. And many people are very apprehensive about, no, why online? Why not go to the nearby coaching center or a tutor there? Now, if you understand their way of teaching, nothing like it, perfect, go. One-on-one offline classes are the best. But if you have a problem in accessing a good tutor, if you want extra help apart from your school teaching, then please feel free to contact me, because online teaching can be really effective if done in a good way. You can also mail me for any such queries on online classes, or when doubt clearance sessions, or any demo class that you would want to have. Okay, keep practicing account the simplest of way, and please do share and subscribe and like. Thank you so much. Take care. See you in the next class.